Hello traders, I hope you had a profitable week. In this video we are going to focus on cryptocurrency and more precisely on most famous one, the Bitcoin. This year, on December 17th, Bitcoin smashed through the previous $20,000 all-time high price, despite the price crash in March due to the pandemic. Bitcoin has bounced back faster and stronger than the traditional financial markets. Now the most used question: is the Bitcoin bull run over? The end of ludicrous gains wouldn't necessarily imply the same kind of bloody collapse that ended previous Bitcoin bull runs. The influx of institutional investors that materialized this go-round might create a barrier against massive crashes though. The truth is that if fear really sets in, institutions can unload just as fast as the most panicked day trader, if not faster. Much more stabilizing, I would argue, is the vast amount of infrastructure that has come online in the past 12 months. Even more significant than those fundamentals, though, is the impending massive social transformation that will come as the pandemic winds down across most high-income countries. Now let's look back to the historical price of Bitcoin and previous bull run. We are going to make measurements in order to find the common between bull runs of the past and try to forecast the next drop or correction of the price. Before that, I want to remind you the psychology of market cycle. I want to cite Warren Buffett, that put it elegantly: be fearful when others are greedy and greedy when others are fearful. This image illustrates perfectly how people emotions drive the market. In the first phase, the rational investors recognize the attractive valuations early in this stage and act confidently. The emotions that drive the market in this stage are disbelief. After previous losses, the fear of losing more money outweighs all else. Next is uncertainty. The herd hesitates and misses the optimal window to enter the market. The third emotion in this phase is optimism. The herd's sentiment begins to warm only after prices have risen. Next phase is when disciplined investors restrain themselves from participating in panic buying. The emotions that drive this phase are enthusiasm. Market demand jumps as the herd rushes in to buy. Next is euphoria. Investors share a collective dopamine rush as markets peak. The third emotion is overconfidence. The masses continues to increase their position despite high valuations. In the face of volatility, long-term investors stick to their convictions and avoid making rash decisions. The emotions that drive this phase are anxiety. Fear sets in as losses begin to mount. Next is denial. Investors ignore the warning signs as market demand weakens. The third emotion is panic. Price plummet as the masses rushes to sell. In the last phase, having survived the storm, rational investors once again see an attractive opportunity. The emotions driving this phase are capitulation. The masses accepts its losses and completely exits the market. Agony. Steep losses take a psychological toll on many investors, and sentiment cycle restarts. The last emotion is depression. The masses are indifferent as markets inevitably begins their recovery. Then the psychological market cycle starts over and over again. We are going to see this pattern in the Bitcoin chart. Let's go back in time. In 2013, when we had a significant bull run and then the market crashes around 83%. Market recovered for a while, and there we have the next bull run. The market increased by 2,484% from the bottom. Make sure to like and subscribe. This encourages us to make more helpful videos. The market crashed again as previous time. The market went down 87% from its peak. This crash is similar in size with 2013 crash. The price consolidated several years, and in 2017 we had the next bull run. The price increased by 12,800% from its bottom. This tremendous growth increased the popularity of Bitcoin everywhere around the globe. We saw the news about it almost in every TV channel and social media. And then, as we first explained in this video about the psychological market cycle, the crash was inevitable. The market went down 84%, almost the same with previous crashes. We notice here a repetitive pattern. The market tend to correct 84% from its peak. And we are going to keep in mind this number for next potential crush of the market. And here we are. The bull run that begins on 2020 and is still continuing on 2021. Now market increased 1,978% from the bottom. Till now, in percentage, this bull run is very similar with the one that occurred on 2013. All-time high is $64,895 level, and price failed to hold above $60,000 level. If we expect the same growth as 2013, that was 2,484%, applied to this bull run, the level correlate with price of $80,000. Based on this projection and the deep analysis of the market, we expect the peak of this bull run to be between the current peak and $80,000 level. Let's assume for the moment that price already reached the peak. Now we are going to project the potential crash or sell-off. As we saw on previous crashes, the common between them was the number 83 to 87%. When we apply this percentage to our current price structure, the next bottom of Bitcoin could be around $11,000 level. If price continues in upside direction and creates the peak at 80,000 level, we are going to project the bottom referring it. Our projection of the bottom correlate with $14,000 level. As a result of that, we have forecasted the potential bottom of the next crash, if we are going to have one. I know that this is a courageous prediction, but we based it on price history, that's repeat over and over again. If price pull back to our potential bottom, the next bull run of Bitcoin can reach easily the $200,000 price level, and even more. Since its creation, the Bitcoin has grown exponentially. If you want to learn more about our strategy and be part of Premium channel, we offer a mentorship program. Check the link on the description to find more information. In this part of the video we are going to study where the pullback occurred in the past. This will help you to forecast the future. After the crash of 2014, the price pullback at demand zone at 152 price level. Let's move on to the next crash that happened on 2018 after the famous bull run of 2017. Price again pullback at demand zone. More precisely at monthly demand zone. We have here the same pattern. On the last two crashes price dropped 84% and both correlate with a demand zone. Now we are going to study the current bull run in search for demand zone. On the monthly chart, the first demand zone is located at the same level as our forecasted level that we explained in beginning of this video. Both levels correlate with each other. This video was recorded this Tuesday. Let's shift on lower time frames to study the market structure on the top. Price has created higher high and higher lows, and we are marking these levels with a horizontal line. This will help us in determining the state of the bull run. Based on the Dow theory of trend change, explained in the previous video, the first sign of trend change is break of higher low. We expect that after this breakout, price will pull back and then will drop again, creating new lower low. Another parameter that we are going to consider is the 50 days exponential moving average, EMA. The price broke above on October 2020 and since then has served as a support for several times. Break below the exponential moving average will be another sign of trend change. We are measuring the recent swings and we can see that the bullish strength is decreasing from 100% to 45% and the last one 30%. Let's update our chart with latest price. Price breakout below the 50-day exponential moving average. This correction is different from the previous ones. This moving average served as a support when price pullback in the past, and this time failed to hold above it, a strong sign of trend reversal. Friday, April the 23rd, price breakout below the higher low, but the daily candle closed above it. We have another attempt on Saturday, but both buyers and sellers are fighting with each other, and price is remaining above 50,000 level. If price breaks strongly below the higher low, then we are going to expect a pullback at supply zones. We have two significant, one in the middle and one on the top. If we add the volume profile to the current bull run, the point of control POC correlate with the same zone for our potential bottom if the market crashes again. Then the cycle will repeat after the crash. We are going to have the recovery phase, and the new bull run will come, reaching new highs.